Friday, March 17th, market analysis. Stan Ehrlich, good morning. A little late this morning for me to do the recording at 10:37 California time, but I wanted to wait a little bit to see if the spider is going to recover from the significant break we had this morning. I wasn't expecting it to come down quite as much as it has so far, which was down about 7 points, 8 points or something. We're down 565 at the moment. Look at the chart on the left, and this is a 10-minute chart. So starting right here is the lower opening this morning, 393 down to 392.5 in 10 minutes. And we managed to get all the way down to 388. But yesterday's low was still way down at 386.25. That's very important. Yesterday's low was in the area of 386.25 as well as 384, give or take a little. That's where the significant support is. We have dropped into the beginning of it, but it's a low so far. We have to turn around and start to rally up and make new highs for the last day or two or three and more very soon. This is Friday. I wouldn't like to see it close down here, but it's very acceptable. I'd like it to come back up again before the close as much as it can, idealistically all the way back to unchanged and higher. But that might be a stretch considering it's down 540 at the moment. And you only have about 2.5 hours to go. So I'm still bullish. There's no change of opinion. It's just that this little dip, particularly this morning, was a little further than I would have expected. I don't mind a minor downside correction. We do have an inside trading range on all of the indexes. So no lower lows of any consequence. In fact, the QQQ is holding up by far and away the best, although it's still down a little. You can always contact me at info@ersignals.com if you want me to analyze a particular symbol, if you want to ask questions, whatever. Let's go look at the other indexes real quick. The DIA has a, sorry about that. Come on. There we go. An inside trading range day today, like the spider. And we are currently a little bit below the middle of yesterday's range. And the lows of the last previous 6 days are still in this price range. 3 of them a little lower, 2 of them a little higher. So this could very well be base building activity. I just need a rally. I don't want to go sideways too much, and I certainly don't want to go down too much more. Otherwise, I'm going to have to reanalyze and look for next support level to the downside. And people, we're getting very, very close to the last vestige of major support, and that was back in October and December of 22. Now, QQQs, tech in general, actually came up today to a new high for well over a month, and, well, a month and a day, and almost made new highs for an extra week or so, which is very close to new highs for many months. So look, the QQQs got almost overbought. It might have a little correction without a problem. Seems like it's doing so. It's a lot firmer. The low of the day is a lot higher relative to yesterday's low than the other two indexes, including the 2000, the Russell 2000, which is doing like the Dow pretty poorly. But again, no breakage of support, no failure of any particular signals. And on average, this is probably a decent place to be a buyer with low risk. Unfortunately, I'm not particularly confident enough to suggest that, sort of, maybe. Okay, let's look at futures. Some interesting situations here. Not necessarily an orange juice, my first one. We've got that pennant formation I've been talking about for, maybe a week now. So watch for the upside or downside breakout. They're usually continuation formations. That would imply going up. Next is the breakage of support by the soybean oil. And we made new lows since August. We did get oversold in the process. So yesterday and a little bit of today is sort of a rally, but up against a minor area of resistance. And today we're down modestly. Bear markets fall faster than bull markets go up, including commodities. And was the commodity broker 30 plus years. So this could make new lows real soon. Early next week, maybe. Next, natural gas. We did get the bottom of the market, the bullish engulfing, right there on February 22nd. Every time you see a green bar, it's an ER buy signal officially. And when you see a red bar, like way over here at this high, August 23 or 22, that is a sell signal, and ER1 is short immediately the day of the red or green. The ER3 tries to get short within a short period of time afterwards, and usually does, but not always. Next chart. So I still think this market could go up some more on natural gas, but the major trend is down. So not confident level, not that high. Where have we heard that? So heating oil broke support yesterday, but got oversold. Coming back a little to resistance. Trend is sideways to lower lately, last few months. I do think these support lines are going to be broken. And if the one below 2.4 is broken, that's a major long-term bear signal. Next, that was heating oil. Here's crude oil. It's already done it. All of the previous lows going back several months, back a year, have been broken. And obviously, the long-term trend is down. It kind of double topped out. And gee whiz, do we have a red ER sell signal on the high day? We sure do. That's exactly the way the strategy is built. It picks tops and bottoms when they occur. Obviously, a new high for 6 months and then a bear market for 6 months only happens once a year. Next, corn, oversold, new lows, rallying a little bit. I'm expecting it to turn back down in the next few days without too much more strength. It's a bear move. A sharp little rally in silver, gold, and platinum. Watch the three here. I bought the low, the system bought the low of the day on March 10th. Bullish ER engulfing buy signal. It's customized with custom RSI added to it. Here's a new high and a new high close today. It's been a week and it's done very, very well. Next, bought the low on February 27th. Today's high is almost a new high for the trend up, but most of the gains have faded away and it's just a little bit higher at the moment. No sell signal. Don't think anything's particularly wrong here. Still looking for higher prices. Oh, I do have to mention that we kind of got into a resistance area and that could cause some trouble. So I'm careful about holding longs too long. Next. Wow, real big rally in gold today, a whopper of a move up. We bought the bottom on the first low of a double bottom as it ended up being on February 28th. A week or so later, a tiny bit higher, another low, and off you went. And today is actually a new high. Wow, since last May. This is the continuation contract, probably reflecting, let's see, March, April, June, gold, probably. Next contract is pushing toward resistance. I think it's going to break through it. And this is the bond market. Remember, I've been talking about this futures contract, the interest rate futures markets, 10-year notes and bonds, building long-term bottoms. Unfortunately, we got kind of overbought the last several days, bumped right up against that resistance level. It may take some time to push through the red zone and close above the highs that were in December and January. If that happens, when that happens, and I think it's going to happen, it's going to be a significant upside breakout, especially if we spend more time screwing around the 123, 124, 132 ballpark. But I think it's going to happen. Next, 10-year notes, same basic commentary, just different numbers. And got overbought, deserves a little pullback, coming back reasonably well. Looks like a new high closing price for the rally, but not a new high and a close above previous highs. That's what you really want. Next, we have soybeans starting to get a little bearish and oversold, so I expect a bounce. So I'm going to leave you with that futures market commentary. Here is the interest rate future forex markets. We had a buy signal basically at the bottom, actually two of them in the euro dollar, one at the lowest low. A couple of days later, they both worked reasonably well, not that great. The support level they bounced off of has held very well. Yesterday and today is a nice rebound. And the trend is lately sideways, but overall up, especially since we got the bottom of the market back on January 28th, when the euro dollar was trading at 95 and a third for the low. We bought the bottom of the euro dollar for many months prior. Come on, many months prior, many months prior, and since. Again, bullish engulfing September 28th on the euro, bullseye, big buy signal. All right, next is Japanese yen, US dollar to the Japanese yen. We had a sell signal yesterday, day before yesterday, Wednesday. We had a rally yesterday back into the approximate middle of the signal day, which is exactly what I want for ER3. So ER1 and our ER3 are filled, and we almost have a new low today, and the new low close is highly likely. So both trades are on their way to increasing their profitable levels. And that's it for forex. I'm going to touch on the sectors because banking sectors. Ooh, so this banking sector had a bullish engulfing yesterday. I screamed bloody murder. Now, there's nothing totally wrong, at least partially, with this much downside correction. We're not stopped out. We're not below the low of the signal day, which was yesterday. And this would be a very low risk if you're wrong and get stopped out place to be going long. It doesn't look good, but that's exactly what happens at bottoms in markets. They never look good at the very bottom. So, having said that, next symbol, XLF, exact same story here. Oversold, bullish engulfing, a little more correction than expected, but no disaster so far. XME, oversold. I think it's about to bounce. No signal yet. Hope to get a bullish engulfing green ER buy signal in the next few days. That would be great, but nothing yet. Next is OIH, oversold, exhaustion gap to the downside 2 days ago. I think it's about to rally. The buy signal didn't work. We did get stopped out right away, lost a little on that buy signal. We might get another one. Remember, these green bars and red ones at tops sometimes cluster. You get 2 or 3 or 4 within a month. So if I get a second one, I'm not going to be surprised, and I'm going to like it a little bit better. Next, XLB. This happens to be materials, spider, oversold, inside trading range day. We've got a downside exhaustion gap. A week ago, we had a great sell signal. It's worked very, very nicely. A couple of buy signals on the way up worked, sort of. Not great, but okay. Profit potentials, nevertheless. And now with the sell signal a week ago, we're seeing new lows. I think it's going to bounce a little bit more, maybe finish closing this kind of pseudo gap at 77.39, but I think it should be sold soon. Next chart is XRT. Basic commentary the same, no particular gaps, just oversold, maybe a little bounce, and then lower levels after that. Maybe it'll take a week or two at the most. XLK, new highs for the move up. Didn't close, not closing yet, above the previous highs, which would be extra bullish. But the fact that you broke into price range that hadn't been traded in before and had lots of attempts to do so, therefore it was pretty good resistance, is now broken. So I think we're going to see it continue to work higher. We're not too far from overbought, so it's not going to go up too much too fast until there's another little correction, maybe even back to here. And the last one coming up is XLV, bullish engulfing 4 days ago, and so far so good. Yesterday, the highest high since. We're having a little dip today. It's an inside day, no higher than yesterday's high, and today's low is no lower than yesterday's low. That's an inside trading range. And they usually mean not too much. I know dojis, but this is not a good example. So I'll leave you with that. Have a great trading day. Have a great weekend. See you on Monday. hopefully this market's going to turn back up.